trading up good vibrations.
Hi everybody, Alex Deploy here from Expert Forex, and in today's video we're going to review the Link Your Account to Success linking service and how it has become safer, better and profitable. So here we are on the account linking website. As the website says, if you are tired of seeing other robot traders succeed while you are battling, and if you don't want to develop the skills for robot trading, this service is ideal for you. I'm not going to go through all the items on the website. You can study that in your time. I will leave the link in the description of this video as well as in the first commentary. So what I want to focus on today is the current status of the service, which has changed quite a lot. It has been running for approximately 4 months since the middle of September, and we've gone through quite an interesting period over those 4 months. Even the traders that are supplying these signals have learned a lot about signal provision and management of risk. And the users of the service have also learned a lot in terms of how they can minimize their risk and still enjoy the high returns that are offered. And on this section here, which was updated over the weekend, you can see the monthly gains of the accounts that can be linked to. So by the way, there are 46 accounts that can be linked to. So already we're showing quite a robust portfolio of accounts that you can link to. And the main figure that I like looking at is the monthly return column, which is this one here, the top account showing a 200% per month return on that particular account. And as we go down, there's almost 100% return, then 50s, 40s, 30s, 20s, and so on. And then right at the bottom here, we get to the 5% a month return. So that's even 5% is not a bad return. That's 60% a year, good return. So we have a lot of accounts that you can link to, and many of these accounts are getting quite old. You can see here's one 239 days, 200 days there, 167 days up there, 254, 244, 200. So the accounts are now becoming nice, have a long, robust history of providing really good results. You can see some of these accounts have gained in terms of their balance quite considerably. The success rate overall is between 60 and 70%. You can see there, if you just go down there, you can just see 60s and 70s as you go down there. So the success rate of predominantly the profit retriever is very robust and constant for all accounts, which is quite amazing. It seems to pan out in the 60s or early 70s, the success rate. So it's a very constant EA. And as you can see, there are numerous symbols that are traded in this particular service. But one of the things I want to point out here is that there's this principle of high risk, high return that in general applies to investments. And for instance, if I had to have a look at this, I would say that anything over 25% is a very high risk investment. Anything over 15% is still a high investment, not a very high investment. And ideally what we're trying to do is we're trying to get our accounts to generate between 15 and 5% return on investment. So that is a level where your risk is nicely balanced with your return, and it is a much safer level than these higher ones. So you must be aware that if you are investing in these higher ones, that you are investing in high risk and very high risk returns, and that the sort of ones between 15 to 5% are more stable and high and more robust. You can see some of these have got 270 days of trading at 9%. That's pretty good. That's almost 100% return over a year. Now I mentioned that because there's more stability in these low returns and more risk in those returns. You can actually combine both. So if you want to use a stable investment, you can increase your lot sizing to increase your risk, but because it's a stable investment, you know that it will be robust. Whereas here, this is a high risk investment. You can go in with a strategy there and say, okay, I want to double my account. The minute I double my account, I'm going to withdraw my original investment, and then my investment becomes risk-free. So there's lots of strategies that investors are currently using to invest in these areas. But as I say, we're trying to bring the volatility of drawdowns and gains down a lot so that the accounts move more to the lower risk level. And in the next table, you'll see that this is being achieved. So here in the next table, we have the weekly changes in the accounts since listing. So the numbers that you saw earlier were the accounts since they started trading. These details are since they were listed. So an account could most probably make 50% return, list, and then it's only from that day that we then start measuring the return. And it's important that we do that because we want to make sure that accounts don't just boost their earnings up and then take it easy once they've listed. So we still have some accounts here that have had really good returns. See the overall gains here, 350, 350, and so on. So the accounts are still generating really, really good returns. But where we are aiming at is we're trying to get the accounts to be more risk controlled and not as volatile. So if you look at this, so if we look at the top item over there, you can see that in the past, it had the best week of $14,000, but a worst week of $5,000. Now, that is very volatile. And that's what happened in the past. We're now trying to get the volatility out, and you can see, and if we go down this list, you'll see that none of these accounts have produced this huge volatility. So 1,600 is still a very good return. It's 16% in 1 week, but it's not 14,000 or that kind of one. So again, we look, if that is 1,200 was produced, look at the volatility before. So we are, by changing the settings and making them more conservative, we are trying to downscale the volatility and produce accounts that have less risk but still produce really good returns. So that's, I think, is the reason for this video. We are producing safer, better, and profitable accounts in the linking service as a result of the learning curve that the traders have gone through in the last 4 months. And you can see here, for instance, 12, you can see the volatility is down. The volatility is down in all of these accounts. But one of the things you also need to realize, if you go down the worst week, you'll see that all of the accounts have had negative weeks. And that's why we want to keep the volatility down. If we do have a negative week, we want it to be a small one. And if you have a positive week, we don't want these 14 and 13,000 weeks. We want a reasonably strong week. Like, for instance, 15% a week is not bad, because remember, this is weekly. It could change at any time. But if we go through this week's results, I'm very, very happy with the results. There are no huge drawdowns and there are no huge gains. The biggest gain, as I can see, is 29. So that account, for instance, might need a little bit of tweaking. It might need to go a little bit more conservative in the settings so that it doesn't, because it could be 2,800 up, but it could also have been 2,800 down. So we don't want that kind of volatility there. It has improved dramatically if you see the volatility before. So that's all good. And I'm very, very happy with the way the accounts are performing right now. The negatives are not as big as they were. Look at this link 4. Look at how big the volatility was there. Now you've got a negative week and it's only 270. So that is one of the aims that we've had with the service, is to bring it under control to the point where the income is slightly less, but the risks are also a lot less. Now, again, I must mention that if an aggressive trader comes here and he says, no, that income's not good enough for me, there's nothing stopping him from increasing his lot sizing and exposing his account to more risk. There's nothing stopping that. So I feel if we build up a portfolio of reasonable risk, reasonable return portfolio, then traders can decide whether they either want to reduce the risk of that portfolio or increase the risk by managing the lot sizing that they would expose their investment to. So just a reminder, if you haven't joined this particular service, I thoroughly recommend that you do. There are the 5 easy steps to join the service, and it is relatively inexpensive. It's roughly $40 a month to join, and when you join you get 3. You can link your account to 3 of those accounts. If you want to link your account to more, there are options to do that. So I would encourage you to visit this page and analyze the information on this page. And from me, Alex Deploy, cheerio.